Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Money Answer Show. This is Jordan Goodman, your host. My guest for the first half hour is Jerry Silberman. He's the CEO and founder of Corporate Turnaround, which helps small businesses with their debt issues. Welcome to the show, Jerry.
Thank you very much, Jordan. Nice to speak to you again.
Let's get a little bit of your background and how you formed Corporate Turnaround and just the books you've done, just a little bit of background about you first.
Oh, many years ago, I would say about 28 years ago, I started a collection agency. And I was a small kid. I was a kid at the time. I was 28 years old. I didn't have a lot of money, didn't have a lot of financing. And I was trying to compete with major businesses. And I was trying to find a way, a niche somehow to compete, because I couldn't compete financially with them. So what I did was I figured all the people we were collecting from small businesses primarily. And those people weren't necessarily deadbeats. They had financial problems and they couldn't afford to pay their debts. So I figured, how could I help them to pay my clients? And long story short, I developed Corporate Turnaround, which was a way for small businesses to get out of debt using what they could realistically afford, not so much what their creditors were demanding. And that was 20 years ago. And since then, we've helped thousands and thousands of businesses get from the start where they're deeply in debt to the finish line when they're completely out of debt and happy. And we receive so many testimonials, which really makes you feel good at the end of the day.
So now let's talk about the general situation of small businesses in debt. Are small businesses getting into more debt? Is the problem growing? Is it getting better? What is the overall situation with small businesses in debt these days?
It's funny because people think the opposite. They think when the economy is doing bad, that's the best thing for my business, that people are in debt. The exact opposite is true. When the economy is doing well, like it is now, people are extending more and more credit to small businesses. The more credit that they extend, the more it helps my business because there's going to be much more debt out there, and the more debt out there. Listen, Jordan, the bottom line is people run into problems all the time. Just because the economy as a whole is doing well, that doesn't mean there's not going to be a ton of small businesses out there that are running into trouble. And businesses run into trouble for so many different reasons. I mean, one could be divorce or an illness or death in the family. And these things, by the way, may have nothing to do with the business itself. But these things could be crippling for businesses. One, if they take out financing that's too expensive. Another could be that a customer of theirs went bankrupt and they lost all the money. Another could be where they're not doing as much in sales anymore. Another could be they're not able to collect their money. Another one is they just lost their biggest customer. So there's a multitude of reasons of why people get into financial trouble or businesses get into financial trouble that may not be related to the economy at all.
Often, as you were saying, small businesses very much tied up with their own personal finances and what's going on in their family. How do you kind of separate what's going on with the business with what's happening financially, a divorce or breakup of partners that really affects the business?
Right. We handle business debts. We don't handle personal debts. That's the difference right there. Well, some people might take a credit card, for example, a personal credit card, and use it for their business. That would be a debt that we could handle. But if they have personal debts that were used for family or household purposes, we don't handle those types of debts. But there are other companies out there that handle those.
So let's go through the process. A small business has an overwhelming amount of debt. They've got some cash flow, but they're having trouble. They can't pay all the creditors what they want. Explain the process that Corporate Turnaround goes through to help them get the situation under control.
Wow. Okay. First, the two most important things in the beginning are finding out how much debt they have that they can't afford to pay, and the other half is what can they realistically afford on a consistent basis or on a consistent monthly basis, let's say. What can they afford to pay towards those debts? And that is really where everything comes down, because when someone comes into a program like ours, they've got one foot in the grave already. It's very hard to discuss what is one of the most personal things in the world, talking about your business's debts. And reaching out, to people sometimes makes them feel like they're a failure. But failing is when you fail in business. If you search out someone that can help you in your worst times, that's the best thing you can do. It's not failure, it's using your head. So when we take on a new customer, again, we determine the amount of debt they have and how much they can afford on a monthly basis. Taking that monthly basis, that budget we'll call it, taking that budget, we determine what kind of settlement offers are available for each and every creditor in the program. So we don't treat creditors equally. It's not like we just, and here's what I want you to know about my company. We don't just send out offers and try to shove a settlement offer down the throats of the creditors. As a matter of fact, that's why I got into this business, because companies that are out there that are doing business debt restructuring, when I owned the collection agency, that's what they were trying to do. They would say something like, take 30 cents on the dollar over the next 6 months, 5% a month for the next 6 months, and then that's it. And I would say, well, let's negotiate this because that doesn't work for me. I said, what happens after 6 months? They would tell me, well, then the company would be out of debt. I said, well, that doesn't work for my client. If you want to pay, if you can only afford 5% a month, why wouldn't you just pay me for the next 20 months, pay back the full amount? They never had an answer to that. So I saw that there was an opportunity in the small business debt restructuring industry, and no one was doing it right. No one was doing it so that people could not only afford it, but where creditors would be willing to work with you towards a better end, and without necessarily giving them a haircut. We're one of the few companies out there. We don't demand that someone takes less money. We don't demand anything. We ask a creditor if they'll be willing to work with us. So we offer settlements as low as 5 cents on the dollar up to payment in full. And we always offer payment in full as an option. The reason a creditor wouldn't take payment in full is because they say, you know what, this company's really in bad shape now. I'm willing to take a settlement because I want to get as much money as possible now rather than take the risk over the long term.
It's always a trade-off between how much you're going to get paid and the time you're going to get paid back. So if you pay in full, it might be over a longer period of time than if you're taking 30 cents on the dollar. Isn't that the way it works?
Right. That's exactly right. For example, let's say to make it very simple, let's say we offered a creditor 50 cents on the dollar lump sum or payment in full over 4 years. Do you really want to take that risk of payment in full over 4 years? Not necessarily. So that's why a creditor would prefer to take less rather than more.
Now, part of your secret is each creditor has a different level of leverage over the business, and therefore you're not giving the same offer to all creditors. How do you determine how much leverage a particular creditor has over that business, and therefore what kind of deal you should offer them?
Okay, well, we only have a few minutes right now on this interview, but let me boil it down for you. Like you said, each creditor poses a unique threat. So some creditors will have personal guarantees, some won't. Others may have a lien on your assets. Other creditors may have a lawsuit or judgment against you. And sometimes doing business with a creditor is vital to the survival of the business, which really gives the creditor the most negotiating leverage. So all those things, and a combination of all those things, each creditor has those things. So we'll make offers to creditors, but it's going to be based on the different leverage they have. And what we really have is our proprietary software, which I'm still building and have been building over the last 20 years, that enables us to make offers that are appropriate based on not only on the leverage of each creditor, but the leverage of each creditor compared to the negotiating leverage of all the other creditors. I mean, a person can't do that. You just can't make up numbers out of the blue. And I also find that most debt restructuring firms are there just to give creditors a haircut. I see it all the time, and it's a recipe for failure, because realistically, in my business, and I've got experience with over 10,000, I think over 11,000 now, small businesses, the issue is not how much they pay back. It's a matter of how little they can afford to pay back. It's using as little cash flow as possible. That is the key to our program, enabling the small business to use as little cash flow as possible to get out of the tremendous debt that they're in.
If there's a small business out there listening that needs help, how can they contact you, and what happens when they do contact you to take it further? Okay.
The quickest way is to call 877-377-3669. 877-377-3669. Or you can go online right now to helpwithpayables.com, because that's the quickest way to do it. Once you do that, you'll start talking to experts that have done this for so many companies and gotten them through the whole process. So the first thing we would do, as you said before, we would ascertain what kind of debts they have, how much they owe, and what they can realistically afford on a consistent basis to pay their creditors back.
So before somebody actually signs up, they're going to do kind of a quick analysis of the debts and what your payment might be before they actually get into the actual negotiations. So they'll give you an estimate before you sign up. Is that the way it works?
What do you mean by an estimate?
Well,
an estimate of what they would pay monthly or what they would pay back at the end?
Well, both. I mean, from the small business's point of view, here's the amount of debt I've got. Here are my creditors. Roughly, what am I going to have to pay per month, and how am I going to pay this off? Is that you get a rough estimate before you actually sign up?
No, we get an exact estimate, because all of our settlement offers are based on those numbers. Now, can a small business predict with accuracy what they can afford to pay in the next 3 or 4 years? Absolutely not. Absolutely not. As a matter of fact, when we started in business, we were looking for as much money as possible out of the small business to get them out of debt as quickly as possible. Now that we are much more mature and we have so much data that we've learned from at this point, the real object is, like I said earlier, when people come into our program, it's not like a proactive thing, Jordan. These people are coming because they're really in trouble and they don't know what to do. They have no way to pay off the debt that they have right now. So they're looking for solutions, and that's what we're giving them. We're able to pay off their debts using, and frankly, this is the number, it's almost always the case, using less than the interest that they're paying now. We're getting companies out of debt consistently using less than the interest that they're paying right now, which is a phenomenal thing. So it's not about reducing the debt as much as making the debt affordable. I can give you a great example.
We have to go to a break, though, Jerry. We have to go to a break, and we'll come back with an example after the break.
Okay.
This is Jordan Goodman of the Money Answer Show. My guest this hour is Jerry Silberman. He's the founder and CEO of Corporate Turnaround. If you're a small business in debt and you need to find out more, you can go to 877-377-3669 or helpwithpayables.com. We'll be back after this.
We're always talking business. Talk to an expert. Call now toll free 866-472-5790. That's 866-472-5790. Voice America Business Network.
We've all been there, struggling to keep up with credit card payments, searching for a simpler, safer way out of debt. Well, here it is. Cambridge Credit Counseling is a nonprofit service that has been helping people reduce or eliminate their credit card debt for over 20 years. Most of us have made late payments and even gone over our credit limits. Before we know it, our balances are out of control, and we can barely afford to make the minimum payments. If this sounds familiar and you're ready to take control of your debts, call Cambridge right away at 1-800-897-2200 for a debt-free analysis. Cambridge will work with your creditors and may be able to reduce your interest rates and get you out of debt fast. In fact, Cambridge's typical debt management clients save almost $150 every month on their credit card payments, and they're debt-free in just 50 months. So there is a simpler, safer way out of debt, and it all starts with Cambridge Credit Counseling. Call 1-800-897-2200 for your free debt analysis. Cambridge Credit Counseling is a Massachusetts-based nonprofit agency providing services nationwide. For complete licensing information, visit them online at cambridge-credit.org. Jordan Goodman is an affiliate. He recognizes quality solutions, forming relationships to help improve the lives of his listeners.
Has your small business been turned down for a loan by the bank? Is lack of capital hindering your business growth? Small businesses unable to obtain bank financing or tired of merchant cash advances can now get the financing they need. Corporate Lending Solutions provides short and long-term capital, revolving lines of credit, and unsecured business loans. Does your business need help with payables, supplies, or payroll? Corporate Lending Solutions has powerful programs to help. While getting a small business loan can be a long, daunting process, with Corporate Lending Solutions, it's simple and takes only 1 to 3 days. Call 800-261-6478 or visit corporatelendingsolutions.com to learn more. 800-261-6478. Jordan Goodman is an affiliate. He recognizes quality solutions, forming relationships to help improve the lives of his listeners.
We're always talking business. Talk to an expert. Call now, toll free, 866-472-5790. That's 866-472-5790. Voice America Business Network.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. This half hour, my guest is Jerry Silberman. He's the founder and CEO of Corporate Turnaround, which helps small businesses with their debt issues. If you want to find out more about them, their website is helpwithpayables.com. Their phone number, 877-377-3669. Welcome back to the show, Jerry.
Thank you.
So one of the big sources of problems for small businesses today are so-called merchant cash advances that get them into trouble. Just describe what a merchant cash advance is and what you do with a business that comes to you with a lot of merchant cash advance debt.
Merchant cash advance is basically a loan, and they're very, very popular today. There's cash advance companies popping up all over. And these loans are easier to obtain than a traditional loan like a bank loan or SBA financing. They don't require as much qualification. They don't require the same credit scores. They may not require the same collateral like your house. They may require collateral, but not your house. So the cash advances problem is that they charge so much in interest. Now, because these are commercial transactions, they're not required to tell you what the APR is. If you go to buy a car, for example, they have to tell you, here's the rate. This is the APR. That's your annualized interest rate. And it's a way to compare financing. But in cash advances, you don't have to do that. So you're able to obtain the money that you need, and certainly there's a lot of small businesses out there that need money that couldn't get it before. Problem is that the cost of the loan is very high, and maybe even worse than that is the aggressiveness and the speed with that they have to be paid back. So I see loans all the time, that short-term loans that are paid back, let's say, over 4 months. Let me give you a quick example.
Okay.
Borrower is unaware of the true cost of the money. That's one of the problems. For example, let's say somebody borrowed $30,000 and had to pay back $36,000. Well, that's kind of easy math. That's $6,000 in interest, which is 20%. 20% of 30,000 is 6,000 there. So anybody sees that and they say, okay, 20% isn't too bad. You know, my credit cards are charging me more than 20% interest, so that's not too bad. But 20% is not the APR. That's how much interest you're paying in a very short time. That's only over 4 months. It's less than a year. If you annualize it out for comparative purposes to any other type of loan, the annualized interest rate, where it looks like it's 20%, but if you're paying it back daily, which most cash advances require, and paid over the short term, 4 months, which is not unusual, the annualized interest rate, the APR, would be 120%, not 20%, which is 6 times the 20% you thought you were paying.
So if a business comes to you with a lot of MCAs, how can you help a business that comes to you with a lot of these merchant cash advances at very high rates?
Well, we have to start negotiating with the creditors. If the creditors are still paying the MCAs, we won't take them into our program. So it's really up to the business owner to decide what they want to do. If they're past due, it's not really an issue. They've already defaulted on their agreement. But the truth is, if somebody comes to us and says, you know, I still have an MCA, I'm still paying it, and I say, well, when you decide not to pay it, that's when we can help you. And nobody comes to us. You know, people think, oh, a deadbeat can come to us. Someone who's trying to beat their creditors, and they're coming to us just to beat their creditors. Jordan, I've been doing this a long time. Nobody comes to us to beat their creditors. Coming into our program is a commitment to pay your creditors. That's the reason you're coming here, to pay your creditors, and on top of that, our fees. So there's no such thing as a deadbeat that's going to want to pay more on top of what they owe. So people who come into our program, they have cash advances. They also have credit card debts. They also have vendor debts. They may have an SBA loan. They may have tax problems as well. All these things combined, a business owner can't do realistically on their own. Like, you know, just because you can play basketball doesn't mean you should be in the NBA. Yeah, anybody can negotiate a debt, but to do it successfully and to win at the end of the day, you need professional help. And we have software that, again, like I said, we've been building for years, which enables us to take what you can realistically afford, not what your creditors are demanding, but what you can realistically afford, and use that to pay off your creditors. And let me just give you one more note as to that. Rarely do our clients that finish our program, rarely do they make all their payments on time. I think maybe only 10% will make all their payments on time. Usually, small businesses still, even the small payments we're taking to pay off their enormous debt, they still can't even afford to do that.
No. So why is it that a small business who has a lot of debt can't renegotiate the way you can? I mean, the software is part of it, but they're just not good at negotiating with the creditors?
Well, again, it's not their sport. If I'm an auto mechanic and I own my own business, does that make me an expert at negotiating? Of course not. I would say that it's not possible for someone to measure the threat of each creditor. And by the way, you got to have a budget. You got to know what your budget is. They don't know what to put aside to pay certain creditors. There's so many strategies, but first is collectors can be very intimidating. It's difficult enough to run a successful small business without being threatened all day from collectors demanding money you don't have. So for the most part, we take the burden of dealing with collectors off the shoulders of the business owner so they can focus on the business at hand. That's the predominant thing. Secondly, each creditor, like we said before, poses a unique threat. And they don't know how to measure those things, and they don't know how to feed those factors back in appropriate offers to each creditor. But the most difficult part of debt restructuring, and the reason they enroll in our program, is their inability to pay. In almost all cases, our customers can't even afford the interest that they were paying. That's worth repeating. We are routinely getting businesses out of debt using payments that are less than the interest that they were paying.
Yeah, it's a big difference. I mean, normally what happens is small businesses are responding to the loudest and most aggressive creditors, whether they have the best leverage or not. You're prioritizing them based on the amount of leverage that the creditors has, and that makes a big difference.
Well, sure. I mean, think about it. There's one, and again, there's no laws with commercial collections. Like there are certain protections for consumers, but there's no laws protecting business owners. So you may have a very, very aggressive creditor who you don't need them. You don't need to do business with their client anymore or their company anymore. They're not suing you. You haven't signed a personal guarantee. And they pose little or no threat to you. So why make them a great offer, or why take money that you can't afford to give them and give it to them when they pose little or no threat to you compared to someone that can shut down your business tomorrow? That's what our software enables us to do.
Terrific. Oh, before we go, just tell people again how they can find you and what happens when they do call and go to your website.
Quickest way, call 877-377-3669, or just go to helpwithpayables.com, and you'll find us. Fill out the form, and someone will get back to you absolutely immediately.
What kind of difference have you made in the lives of small businesses that have signed up with Corporate Turnaround?
Their whole life. It's life-saving. I mean, I know we're talking about business, but the business has an owner. The owner has a family. This is life-saving. That's it. These people can't sleep at night. I know how they feel. It pervades all of our customers over the years. It's the same thing. It's very, very, very personal, and their lives are changed. I can get you an unlimited amount of people that have been in our program that say that all the time. We save their businesses, and we enable them to support their families. It's that simple.
Terrific. Well, thanks so much. My guest this half hour has been Jerry Silberman. He's the CEO and founder of Corporate Turnaround, helped a lot of small businesses get out of all kinds of debt issues. Again, if that's relevant to you, you can find out more at helpwithpayables.com or 877-377-3669. Thanks so much for being on the Money Answer Show, Jerry.
Thank you, Jordan Goodman.
And we'll be back after the next break with another guest. We'll be back.
Stocks, bonds, investment opportunities, financial news, and talk. We can help. Call us now toll free, 866-472-5790. 866-472-5790. Voice America Business Network.
Attention heroes, current and former firefighters, law enforcement, military, medical, or educational professionals. Heroes can receive rewards averaging over $2,500 when they buy, sell, or refinance a home. Heroes come first. Along with the Homes for Heroes is the nation's largest hero reward program. Their mission is to provide extraordinary savings to heroes who provide extraordinary services to our nation and its communities every day. Learn how you can purchase a home for no down payment, no closing costs, and get money back at closing. Find out how you can own for less than you may pay for rent. Get your hero rewards at heroescomefirst.com. That's heroes, Heroes, comefirst.com. 888-437-6114. Jordan Goodman is an affiliate. He recognizes quality solutions, forming relationships to help improve the lives of his listeners.
Do you or someone you love have a life insurance policy that's no longer needed or not affordable? Did you know that you can sell your policy for cash? Your reason for buying life insurance has probably changed. Thousands of Americans turn to life insurance settlements to help sell their policies. They act as your representative, getting the highest market offer for you. You've got nothing to lose by simply inquiring. If you're over 64 with $100,000 or more of life insurance, you may already qualify. Call 877-485-6681 to get your free non-binding appraisal or visit fundinglife.com. Life Insurance Settlements. Discover the true value of your life insurance. 877-485-6681. Jordan Goodman is an affiliate. He recognizes quality solutions, forming relationships to help improve the lives of his listeners.
From the boardroom to you, Voice America Business Network.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. For this half hour, we'll be speaking with Rob Denton. He's the founder and director of financial services at Corporate Lending Solutions, which helps small businesses get good loans and helping finance their various activities. Welcome to the show, Rob.
Hey, thank you very much for having me, Jordan.
Let's just tell a little bit of your background and how you got into this whole field of helping small businesses get good loans.
Wow. Well, it goes back 25 plus years. We've been through a couple of financial cycles, and I'm sure everybody remembers the 80s, the 90s, and early 2000s. There were periods of time where it was easy to get capital. You can go to any bank. It was before there was online lending, but pretty much you can go anywhere and get a credit card or a working capital line for your business. And if I think everyone who's listening probably remembers the pain we all went through back in the mid 2000s, 2007, 8, 9, where everyone was closed for business. There was nobody lending anymore. And like your prior guest, we had a lot of clients who needed restructuring work or corporate financial services, and more of them as the economy turned. 2011, 2013, more and more business owners were seeking capital. And, we know what it feels like. I've been fortunate in business to have good days and bad days, just like everybody, but we were fortunate where we were able to sell a business. We know what it feels like to win big in business, but we also know what it feels like when we have no capital or ability to grow with no money available. So years ago, we're talking 20 years ago, we were able to position ourselves as a small business advocate to help businesses with various selective services. And one of the most important things, and I think you'll agree with me, is knowing not only that you need money, not only that you want it, but knowing where to go for it and to avoid common mistakes.
So how has the Dodd-Frank law, which went into effect after the financial crisis, tightened up lending for small businesses?
Well, Dodd-Frank was an interesting, bit of legislation that caused banks to really pull back their lending parameters and such. And as a result, businesses that would normally, be able to get capital weren't able to get it. So the legislation and all of the parameters with which to borrow, really changed. The game changed. Most banks closed up shop. They weren't lending anything. And really what happened after Dodd-Frank was a crop of online lenders came about. Merchant cash advances, the ability to go after various different types of applications online. And really, the Dodd-Frank had its unintended consequences of giving birth to an industry that, quite frankly, probably hurt a lot of businesses because it became an easy money policy to get the money, but the problem is the payback terms and the rates really were not conducive for most businesses.
So what sources of money do you have that are better than the merchant cash advances and a lot of these online lenders that charge very high rates and fees? What, in general, kind of sources can you tap to get loans that people wouldn't be able to get on their own?
Well, it really starts, first of all, to answer your question, not with a question, but with a statement. It really starts with, okay, well, what do you need the money for? And, is it for growth? Is it to pay off some obligations? Is it for equipment? Is it for something else, for inventory, payroll? So we really start, and I really want to say this the right way, with a consultative approach that positions us first in knowing not just how much or why, but in what direction to go. So there are various different forms of finance, and it's not always debt. It's not always a loan. You can look at various forms of collateral that you may look at, like let's just use the term factoring, for instance, AR finance. Sometimes there's a vein of a great asset in the form of receivables that someone may be waiting to get paid on, that if we were able to speed that up, they wouldn't have to incur any debt. We'd just be able to speed up their cash flow cycle utilizing receivables.
Okay.
That would be one scenario. Right, that would be one scenario. Other scenarios would be, SBA loans, various different bank products that have come out over the last 6 to 8 months that are now really kind of taking that term. You just said MCA, merchant cash advances. There are programs that have come out where we can consolidate those. We can give a revolving line program. But, again, it encapsulates asking good questions first. So you asked me a broad question about what products there are. There's a lot. But the nice thing is my firm, Corporate Lending Solutions, we're going to ask the questions to find out the need first. If that makes sense.
There is a specific SBA called the 7A program. How does the SBA 7A program work?
Well, I'm glad you brought that up. The 7A program is actually a program that it takes a lot less time than you may think. Most SBA programs can take anywhere between 3 and 6 months to actually get through the paperwork. The 7A program is actually one that's designed for the small business owner who's looking for cash flow. Okay, cash flow opportunities. So the 7A program, it's going to be, we're going to look for, financials with respect to bank statements, tax returns, cash flow, P&L balance sheet, and things of that nature. But the 7A program is really, I guess the best way to put it is it's an SBA light, LIT light product where you can get it through much quicker without there being stipulations on exactly what it's to be spent on. You can use it for working capital. You can pay off other debts. Whereas some other programs are really going to be a little bit more ominous on what you can actually use the funds for and more specific.
So one of the differences between what you do and what traditional banks do is you're willing to look at cash flow and look at bank statements and not inventory. Traditional banks tend to want to have inventory or widgets they can seize if the loan isn't paid. In your case, in many cases, you can get loans without having actual physical inventory. Is that correct?
That's 100% correct, but I want to make a very, very important distinction. We are what you would call a storybook underwriter. Banks mostly buy the numbers. The numbers are, tell the story, and that's their parameters, and they stay within it. With our firm, with Corporate Lending Solutions, the story matters. Storybook underwriter is going to find out why are you where you are right now, what happened. Quite frankly, you could have a cash flow issue that was not your fault or something that was by design in your industry. For instance, the pharmaceutical industry, they may not cash flow every single month or have the profits that they want because there's a gap in reimbursements. So there's a big difference between Corporate Lending Solutions and our consultative approach and a bank. We like to call it more of like a triage. What's going on? What are the problems? And also, of course, we're going to look at the financials, the numbers, the cash flow, the balance sheet, but the story matters.
So let's get some examples, a case study of recently. For example, you did one on the construction business. Tell us how you were able to help that person in the construction business get the financing they needed.
Okay. Well, the great news about our business is we don't we will look at almost every industry. We don't discriminate. And construction historically has been a very difficult business to finance over the years because everyone's concerned about payback and gyrations and stuff like that. And about 5 years ago, when the merchant cash advance space, those short-term loans, high interest rate, quick payback came about, they really started contacting a lot of the construction companies. And what was traditionally a hard industry or difficult to get capital, all of a sudden it was very easy. It was almost they were getting calls all day long, hey, here's more money, here's more money. One particular client that we have, he's doing about $6 million a year in revenue. It's up in the Northeast. His clients are very large government contracts, municipal contracts. His labor is unionized labor. And at the end of the day, he really needed that capital to grow. There are more cranes going up. There's more construction going on now than any other time that we can remember in history. And at the end of the day, as he was growing and taking on more jobs in the American dream, let's grow, he had an appetite for cash. He was getting paid slowly, net 60, net 90 days sometimes, and his suppliers needed to get paid net 20, net 30, net 45, and let's not forget labor. When it's union labor, you cannot miss a payroll. So there was a need for cash. And at the end of the day, this particular client, I think at one point had about $450,000 in merchant cash advance loans out there, or advances. And he was paying about $40,000, maybe $50,000 a week, to the point where he was spending his whole day focused on where do we find more money so we could pay off the old money. And he was barely able to make payroll. He was introduced to us by one of our bank partners, and little by little, as we understood the story and we saw his receivables, we were actually able to utilize the receivables to help him pay down his open short-term advances and then get in a much better cash flow situation. At the end of the day, this particular client goes back to November. To date, since November, we've funded him for close to $5.5 million. He no longer has a daily stress factor of trying to make payments on these short-term loans. And in fact, he's been able to position himself. This is a big part of it, Jordan, very important. Because of our involvement, and now instead of paying his suppliers slowly or at the end of the cycle, he's now paying them sooner, and we were able to help negotiate terms with his suppliers at rates that are much better than what he was paying before, almost 3% better because he's paying on time.
And this is not something that he would have been able to get from a traditional bank, that kind of help. Is that right?
No, he wouldn't have been able to get with a bank. He was already in default with one of his merchant cash advances. He had a tax matter at the time, and he was showing losses. So a traditional bank would have looked at it and said, I'm sorry, I can't help you. So rather than miss payroll, rather than close up shop, this gentleman's business, now doing close to $10 million a year in revenue, he's moved in a different direction. And I want to stress this. It wasn't that he had a bad business back then or a good one. He was just funded with the wrong facilities. He was using the wrong type of cash flow. He had a great asset in the form of his receivables. And you have to understand this. When you're talking about AR finance, we're not necessarily looking at the credit worthiness of our client, of the guy who's getting the money. It's the account worthiness of the account debtors, the people who owe him money. So it's a much different situation.
Very good. If people want to find out more about getting financing for their small business through you, how can they contact you?
The best way to do it is online at www.corporatelendingsolutions.com. That's corporatelendingsolutions.com. They can call me direct at 800-261-6478. It's 800-261-6478 is the direct number.
Very good. We're going to take a break. This is Jordan Goodman of The Money Answer Show. I'm speaking to Rob Denton, who's founder and director of financial services at Corporate Lending Solutions. We'll be back after this.
From the boardroom to you, Voice America Business Network.
Looking for an investment option? Consider Secured Real Estate Income Strategies. Secured Real Estate Income Strategies is a real estate-backed option offering investments with a monthly income objective. The goal of the strategy is to lend money to real estate developers. SREIS offers an 8% preferred return per annum, plus a share in any profits. While there is risk, including loss of capital, and you should carefully read the offering circular for full details, Secured Real Estate Income Strategy screens each real estate loan carefully. Call 888-444-2102 or visit securedrealestatefunds.com to learn more. 888-444-2102. Jordan Goodman is an advisor to and part owner in Secured Real Estate Income Strategies. This does not constitute an offer to sell or a solicitation of an offer to buy any securities. Securities offered through North Capital Private Securities, member FINRA, SIPC.
Are you a homeowner tired of making monthly mortgage payments with little progress towards paying down your principal? Does paying off your home in 5 to 7 years without making larger or more frequent payments sound appealing? Paying off your home in full in 5 to 7 years is really possible thanks to Truth and Equity's Mortgage Equity Optimization System, a money management approach that puts your money to work for you 24/7. If you own a home with some equity, have a decent credit score, and verifiable income, you owe it to yourself to learn more about Truth and Equity's program. There's no need to replace your mortgage or refinance in many cases. The system works for new home purchases as well as current mortgages. Your home is your largest investment. Own it outright in 5 to 7 years. Call Truth and Equity 888-262-5540 or visit truthandequity.com 888-262-5540. Jordan Goodman is an affiliate. He recognizes quality solutions, forming relationships to help improve the lives of his listeners.
Get the news on our shows and other happenings by following us on Twitter. Find us at VoiceAmericaTRN or twitter.com/VoiceAmericaTRN.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this half hour is Rob Denton. He's the founder and director of financial services at Corporate Lending Solutions. You can find out more at corporatelendingsolutions.com or 800-261-6478. Welcome back to the show, Rob.
Thank you.
So we're doing some other examples of people you've helped, small businesses you've helped who've had trouble. So you had a client who was around for 5 years and in return needing funding for new jobs. Explain how that one worked.
Well, let's start with, we've had clients that have been with us for, a lot of years, 5, 6, 7 years. And sometimes we're not actually, on the books with them. There's no loan, there's no nothing. They ask me questions on some other forms of business, some, consulting issues. And, we stay in touch. We always like to keep that friendship open that was brought together by a business opportunity. This particular client, we met him 5 years ago. He's been a great friend over the years. Christmas, holidays, we always speak. And, his business has morphed. It's done very, very well. He's doing about $30 million a year in revenue. And, again, another construction business that's benefiting off of the growth in the economy. And, because of that great growth, sometimes you run into these pitfalls, these needs for working capital to take on another venture or to take advantage of a supplier discount when you can buy high volume. So we're not talking about a business who's hurting for cash. We're talking about one that wanted to take advantage of something. And he's been getting a lot of phone calls. His name was online, maybe sold once or twice from these marketing companies that are out there, and call them every day and, hey, we got great rates for you and free money, and give us a call. And at the end of the day, when they go through the whole process, it's, I don't want to say everyone's bait and switch, but on some level, it just didn't smell right to him. And he asked me to review an opportunity that he was looking at for working capital on a friendly basis. And when we reviewed it, it wasn't what it was all cracked up to be. And at the end of the day, this 5-year client who's now been a friend, not a client for a year and a half, is a client again. We funded him $250,000 last week, put him in a position to take advantage of his supplier discounts. And, sometimes, the God bless and, hey, how you doing, comes full circle. And that's just how we like to treat our clients and our friends.
Another example is a generator company in Florida. Tell us the story with that one.
May, when May rolls around, especially in South Florida, the term hurricane, or there's another low depression in the Atlantic, or wherever, generally gets everyone spooked, and everyone starts looking to get their house prepared for hurricanes. We were introduced to a client through one of the local banks. This particular client's been with the bank for about 4 years, and great growing business. He wanted to take advantage of the hurricane frenzy. He's in the generator business, doing generators with, in homes. And at the end of the day, when he went to his bank and asked for some financing, the bank turned around and said, you know what? Thank you for being our client, and we love to help you out, but you don't cash flow at this point. This is your, traditionally, you're a little bit slower in the winter months, and there's not a lot we can do right now. You're maxed out. However, I can introduce you to some friends of ours over at Corporate Lending Solutions, and it's important to note, we work with a lot of banks for their turndowns, and this particular client was able to take advantage. He had some very large contracts that he was offered from construction groups, and the biggest problem that some business owners have, Jordan, when they say yes to an opportunity, if they can't finance that opportunity, there's nothing worse than giving yourself a bad reputation if you can't meet the demand. So at the end of the day here with this particular client, we're able to finance them for a little under $200,000 so that they can not only compete but flourish. And as a result, this has been a banner year, a breakout year for them. And I will tell you that the banker who referred him over to us is extremely happy, because guess where that money got deposited? Over at that bank.
I see. So it's in that case, it's a seasonal situation. He just didn't have the cash flow to meet the demand because of the seasonal situation.
Absolutely. Yes. And there are a lot of businesses out there that need money because they're trying to survive. They're trying to pay off obligations. And then there are a lot of businesses that are trying to take advantage of opportunity, and they don't always have access to that capital. So that's really the point I want to drive home on that it was an opportunity for this business, and if they didn't have us, it would be the same old thing year over year. They'd be stuck in that cycle. This is a breakout year for them.
What kind of businesses are looking to invest or to lend to small businesses? Is it hedge funds, or what are the sources of capital once they understand the story that you're tapping?
Well, we have institutional capital behind us. There are private investors, there are hedge funds, as you mentioned. There are various different sources of capital. But I will tell you that it's been an interesting journey for a lot of business owners because, again, there's various forms of finance. There's AR finance, there's PO finance, there's inventory finance, there's asset-backed lending, with real estate or some other piece of equipment, and then there's the unsecured space. Obviously, in the unsecured space, the cost of capital, when it's not secured, is going to be a little bit more expensive. So there are investors who look for that return in various industries. So the nice thing about our firm, over the last 25 years, we've cultivated fantastic relationships with our lender partners, both institutional and private. So I will tell you that no one box fits all. We do not have to only go in one direction. We have multiple solutions for clients.
One problem for a lot of small businesses is meeting payroll. So you have something called Payroll Funding Assist. How does that work?
Interesting situation, and it's happened a lot. Companies are growing, things are happening, suppliers are calling, there's growth all over the place. But invariably, it comes time when you're a business owner that sometimes you can't pay yourself, and that you can live with, but you can't live with not paying your employees. Sometimes there's a need, whether it's 1, 2, 3, or 4 business cycles or payroll cycles that you need capital for. Payroll Fund Assist, very simple. Go to the website, Corporate Lending Solutions, fill out a short form, and we'll discuss all the parameters. It's a very quick turnaround. We can have someone funded within 48 hours so that they can take care of one of the most pressing issues that face businesses today, and that's payroll.
And then something else you have is called Vendor Pay Assist. So that's taking advantage of discounts, or what is Vendor Pay Assist?
Well, there's many sides to a business, and some people know how to work in their business, and some know how to work on their business. And one of the things that's on the business is your relationships with your suppliers. A lot of times, or oftentimes what happens, you have terms with your suppliers, and sometimes you can't meet those terms, and you extend credit. The Vendor Pay program helps you have an outside line, a reserve line of financing to be able to meet demand for your suppliers. A lot of business owners are just paying on time. Many of them don't know how to take advantage or even ask for a supply-side finance reprieve or a discount for paying not only on time, but ahead of schedule. And we do this a lot in the pharmaceutical industry, a number of other industries that are a little bit under siege based on their sales cycle. But being able to have additional capital to go to your suppliers, or even in the worst case scenario when you've maxed out your line of credit, you're on COD or credit hold, this particular program can help you take advantage of good opportunities, but also help you if there's a gap or a problem on the backside where you have a slow pay situation.
So again, tell people how to contact you if they're in the situation where they need financing for their small business.
The best way to do it is go to www.corporatelendingsolutions. You can call me direct at 800-261-6478.
Yeah, again, that's corporatelendingsolutions.com. Thanks so much. My guest this half hour has been Rob Denton, founder and director of financial services at Corporate Lending Solutions. He's helped a lot of small businesses get financing and grow when they didn't think it was possible dealing with traditional banks. Thanks so much for being a guest on the Money Answer Show, Rob.
Thank you very much, Jordan.
Thanks again. We'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.